Hello everybody, this is Jessie, and today I'm here to talk to you about the new tax code that went into effect end of 2017. The question I'm being asked frequently is, what impact will that have on the housing market in 2018? That's what we're going to talk about today. There was a new tax law that was put into effect at the end of 2017. To understand how the new tax code will affect you personally, check with your accountant or tax advisor. But to help break it down, there were three major proposed changes. The first one, changing the requirements of the exclusions to gain on the sale of the principal residence. The original proposal, owners need to live in their house at least 5 of the last 8 years to claim exemption. The new tax code, however, stuck to the original. Owners need to live in their house for at least 2 out of the last 5 years to claim this exemption. What impact will that have on the market? None. Nothing changed. The second proposed change was the reduction on the limit of mortgage interest deduction, affectionately known as MID. The original proposal reduced the limit on the mortgage interest deduction from $1 million to $500,000. The new tax code reduced the limit on mortgage interest deduction MID to $750,000. The limit on deductible mortgage debt to $750,000 for new loans taken out after 12/14/2017. Current loans up to $1 million are grandfathered in. So what impact will this have on the market? Assuming a 20% down payment, this will only impact buyers purchasing homes between $938,000 and $1,250,000. So again, what impact will this have on the market? Experts seem to disagree on how much that impact will be. Calculated risks Bill McBride thinks very little, while Capital Economics claims the impact on expensive homes could be detrimental. So which one is it? We have to understand that 30% of all Americans itemize, while 70% don't. So people who don't itemize will get a big tax break, and people who do will be impacted if taking on new mortgage debt, because now they will be subject to that $750,000 limit. The third proposed change was the elimination of the state local tax deduction, which includes property taxes. The original proposal was to completely eliminate the state and local tax deduction, including property taxes, and that would have been tremendously detrimental to the real estate market. But instead, the new tax code allows for an itemized deduction up to $10,000 for total state and local taxes, which includes property taxes. So while it wasn't eliminated completely, it was still limited to $750,000. What impact will that have on the market? Calculated risks Bill McBride feels that SALT will have an impact on housing in some areas. Some people might choose to live in one state over another based on taxation. This could impact demand in certain states. So what does all of that mean for you? Again, sit down with your accountant or financial planner to fully understand the impact of the new tax code for you and your family. So now that you have been filled in the broader sense of what this new tax code is all about, I highly encourage you to go find that financial advisor or accountant that can fill you in on the details of how this will impact you and your family specifically. If you don't have a financial advisor or an accountant that you trust, please come see me. Maybe I can point you towards that person that I trust who might be able to give you that guidance. Meanwhile, if you have an investment, sale, or purchase in real estate that you're thinking of, please come see me. That's where I can help. I would love to be able to sit down with you, to be able to talk with you, and give you the best that I can offer. I look forward to speaking with you soon. Thank you.